Today's date, January 4th, 2015, Sunday. Looking at Tesla. First thing, that I see out of Tesla is that you did have a decent bounce out of the sub 200 move. You had a nice kind of 4 or 5 day pop back up towards the 220 range, and you've been kind of going sideways between 220s and up near 230. Hasn't been able to crack 230. Hasn't really been able to stay below 220. It tried to on Friday, but it got a nice bounce off of the low. Your low Friday was 213. You closed back up near 220. So, it looks like it's going to try and have a bottom in place, but it's going to need to be holding 220 to keep the bounce play going. That's my first read. Needs to hold 220 to keep the bounce off of 200 going. If you can keep staying above 220, then I like Tesla to retest the recent range, that it just backed off of up here in this 225 to 230 area. But otherwise, if you're staying below 220 on Tesla, then the low from Friday will be back in play. Your low was 213, so I'm going to say 215 to 213. And then the other key low is this gap up low from, December 18th. When you reversed off of 200 the day before, and you closed on December 17th at 205s. Next day you opened 212s, and that was pretty much your low. So you did a good job holding that. So I'm going to open up the range a little bit. I had 215 to 213 as key support. I'm just going to extend that down to 212. 215 to 212 as my key area on Tesla. Below 212, that would really open things up into this gap area. That 205 close that I just referenced from the 17th. So that would then come into play. And then, of course, 200 comes into play as well. To me, on Tesla, I think 220 offers a good setup. I think you're vulnerable if you stay below 220. 220, 10% extension mark above 200. Another thing at play here relative to 220, if you look back in April and May here on my daily chart on Tesla. I'm just circling it. I'm going to call this an R1. Okay, you had resistance at 220 in April and May. You can see that. And then you had it again around 220 in late May, early June. But then once you broke out above 220, which was this move here in July, which I'll call breakout, just BO, you then saw the 220 area start to act as support. I'll call it S1 right here. And had a big rally to the upside, and then you pulled back hard, but then in October you saw that 220 area act as support again. S2. My S's are looking like 5s. But then, of course, in December, we broke down below 220, all right, and now we are back testing the 220 areas. So, this 220 area has been a lot of congestion since April on the resistance side and on the support side. So here's another chance. Do we see it act as support here, or does Tesla roll back over at 220 and go down towards 200? So I just think 220 is very important in terms of the next directional move. We could see it act as a pivot for either a move back down towards 200 to 190 or a move up towards 250. All right, moving on, looking at Netflix. Netflix is back near 350. And hasn't done a whole lot. It's been consolidating more or less the entire month of December. You did go down, but you were able to come back up. And if you look, you go back to October when it got down into the 330s, bounced back up. You know, since October, Netflix really hasn't gone anywhere. You closed October 17th around 350, and here you are still around 350. So more or less just continuing a 3-month-long consolidation. And the setup on Netflix will just be relative to this 350 level. Not going to spend a whole ton of time talking about it because I think it's pretty simple. If you're above 350, you're going higher. If you're below 350, I think we can start pulling back again. One thing I do want to see on Netflix, you need to get out of this 330 to 360 range to get another directional move. One sec, guys. Alright, so Netflix to me, like I said, needs to get out of this 330 to 360 range. I'm just saying that based on the last 2 weeks, that's kind of where it's been trapped. So let's get above there or below there and we can start looking for more. Looking at Amazon. I'm a little bit excited about Amazon because I think there's some really good potential to roll back over. It was weak all of 2014. And you can see it's coming into this downtrend line here. This is a downtrend line off of the all-time high. Let me just confirm that, see where this initially got drawn. Yeah, this is a downtrend line off the all-time high, and this downtrend got drawn on my chart. I drew this in late July, early August, once this move happened right here, once we backed off of that to the downside. So, you know, at this point, I don't draw this trend line. The trend line has just drawn itself. You can see that it held up pretty perfectly in September, and then in November you were able to get above it, but wasn't able to hold above it, and now here we are again trying to get above it. But Amazon's so close to 300. You know, you go back, you look at Tesla. Tesla got down towards 200, but showed a bounce back up. Netflix got down towards 300, showed a bounce back up. Google got down towards 500, which we'll talk about, showed a bounce back up. Amazon, though, you got down on 300, and yeah, you bounced a couple points, but we're going into the new year right at 308, so Amazon still looks like one of the weaker links to me, and it's a name that I had success on the short side with the last month of the year. So, you know, one of my goals is if Amazon's giving good downside, I need to be attacking that because this is something that going into the new year I think can really sell off. So that's the first thing I'm going to say about Amazon is, you know, that she looks vulnerable while below 310. I think if you are holding below 310, you can look for a move back down towards that 305 area, and then of course, 300 is a key psychological level. And below 300, we start getting that sell-off potential again. Above 310, and you can challenge the 313 to 317 range, which kind of capped it to end the year. And then 320 would be key, and up towards 325. To me, Amazon, like I said, vulnerable while below 310. Even above 310, you got to get above 315 to start a bottoming process. That would be in line with this downtrend line right here. The downtrend line is coming into the week, or coming into the year at 316. By the end of the week, it'll be down around 315, and then next week it'll be below 315. So to me, Amazon, you got to get back above 315. Intermediate term, or maybe even short term, what happens at 300 is very important. We've seen buying below 300 on two occasions. Three occasions. October 16th dipped below 300, got bought up, and then October 24th broke below 300, got bought up, and now most recently mid-December dipped below 300, got bought up. I don't think Amazon can continue to go below 300 and keep getting bounced. I think, if you come back below 300 again, it could be lights out on this thing. All right, looking at Google. Google's an interesting study because she showed a really hard bounce off of 500. I was watching it from afar, just checking prices on my phone while I was on vacation, and I saw it. It was December 18th. That was the wild day. I had to double check because it opened at 515, went down to 506, then closed at 514. I was like, wow, that's a wild day. And then the next day you opened 514, went down to 508, and closed at 520, and then the 22nd and 23rd you just made a really nice move from 520s up to 540s, where now you're just kind of consolidating on Google. You're down 4 days in a row. You did finally get some extension above this pesky downtrend line here that had been keeping the stock capped since late September. So Google can maybe be a buy on dips now, but it's going to need to hold 525. To me, Google has a bottom in place on holds above 525, and you can buy dips. But it has to hold 525. On the resistance side, we've got some in this 530 range. Below 530s, looking for tests on that 525 mark. And then below 525 would kind of be a rollover on Google, and I think she could start selling off again. So, Google, at the moment I think you can buy dips, but I don't have a hardcore bias until I see a little bit more action on Google. One of my goals this year overall, I'm going to write a blog post about it for you guys later this year, is to try and do less predicting and more reacting. With that said, it's a fine line because I do believe in kind of having a bias, because you want to be able to react properly if your bias shows up, if that gut feeling shows up. I do believe in gut feelings. Google, I don't have much of a gut feeling here. I think, might need to do some consolidating around this 525, 540 range to really reveal itself, and then go from there. But above 525, I'll be leaning on the long side. Looking at Priceline, Priceline's similar to Google. I don't have a real hardcore bias here. I think it maybe needs to consolidate a little bit more, or break a level or two. Get above 1170 or get below 1120s, 1130s or so to really commit. But what I'll say about Priceline is that I'm watching this 1150 area to see, are we able to get above it, or are we consolidating below it? I think if you can come above 1150, then you can start a pretty nice rally in Priceline. Up towards 1175 to 1200, but below 1150, and Priceline is vulnerable to a test on that 1125 area. Bigger picture on Priceline, though, is this thing has been consolidating for a few months. Need to get a breakout above 1170 to really get the longer term uptrend going again. Don't have a huge setup on Priceline. See what tomorrow looks like, see what Tuesday looks like. Maybe things will be a little bit more clear. Looking at GoPro. GoPro looks pretty decent. Looks like the worst is over for the stock, potentially. It was able to get stability back above 65. And looks like it wants to challenge $70. You had the lockout come and go. It didn't destroy the stock. Looks like it was priced in for the most part. We had been talking about that. I tweeted, because when I was out of town, I had a longer-term buy order in my IRA account get filled on GoPro. I don't trade my IRA positions, but I did buy some GoPro at $54. Just a small position. I don't have a big IRA account cash-wise, since I'm young. I haven't been able to make a lot of contributions to it, but I bought 30 shares of GoPro at $53 with the intention of buying more had it gone lower, but it did not. So just filling you guys in on that. I am back in long term, and short term trading wise, looks like it might be time for the momentum to come back in. If we can stay above $65 here, even better would be staying above 66. Then we can go for that 68 to 70 test. And above 70, it starts to get really interesting on GoPro to the upside. Thursday's low, or I guess it was Wednesday's low of 62.80, That's very important now. That is a very important low in the stock moving forward, in my opinion. If GoPro were to break that 6280 low, then I think you could go back into that 55 to 50 range. And getting a hold back above 70 would trigger further momentum higher towards 75 to 80 bucks. So GoPro will definitely be on watch for that $70 breakout just from an intermediate term perspective. I think if you get that, this thing could really open back up to the upside. Looking at Twitter, Twitter to me is kind of in a similar boat as Amazon. You know, we've gone over these names. All of them have shown bounces, including Twitter and Amazon, but Twitter's bounce and Amazon's bounce are weaker than anybody else's bounce, and for that reason, you know, just like I'm kind of excited on Amazon to the downside, same thing goes for Twitter. I think this name is very, very vulnerable. You're still not anywhere back near 40 bucks. So still looks like, you know, 33 to 30 could be on the way in the intermediate term. And she's still got work to do the upside. To me, I think if you stay below 37, then I expect a backtest on that 36 to 35 range. If you can get above 37, you can start that to rally a little bit better. But again, I think short this bounce if it fails to get above 37. And needs to regain 37 to set up a test of 39 to 40, and overall needs 40s to set up a bottom in the stock on a more intermediate term basis. So that's what I've got on the primaries. Talk about the S&P and QQQ as well, but first, are there any questions on any of these primaries here, or anything that we've discussed? Alright, doesn't seem like it. So I'm going to look at the QQQ ETF that all of my stocks are in to one degree or another. It's pretty simple on the Q. This low, this December low around 99 bucks, I want to get it exactly. It was 99, okay, so it was really around 100 bucks. 99.96, 99.92 were the lows on December 17th and 16th. Those lows are very important going into January here of this new year. As long as you stay above these lows, then QQQ will remain a buy the dip type of play. If you were to break down beneath these lows, then that's where the October low around 90 bucks would come into play. You'd have some real good downside potential if you can break below 100 bucks. So I like QQQ from that round level perspective. Anything above 100 bucks is one of two things: consolidation or further momentum higher. And consolidation does not mean downside. Consolidation, I would view that as a bullish consolidation before a continuation of the overall trend, which has been to the upside. So yeah, the S&P 500, it's going to be very, very similar. The S&P here, your December low was right around 1955-ish. Oh, no, sorry, was not. 1972, 1973 was the December low. Okay, as long as you're above that area, then you're going to be fine here the early part of this year. And we've got a lot of cushion now as well. You're above 2050. Okay, so that'll be the level that I'm watching in the immediate term, that over under 2050 setup. So if you can hold 2050 now, looking for upside tests towards the all-time highs, which is now basically 2100, 2093.55 is your actual high. Below 2050 and can pull back. You've got trendline support here, going to be down around 2010 to 2020 going into the week. I'll just have key support between right around 2030, 2025. And then below that we could go down closer to 2000. But intermediate term, the market will go higher while above 2000 and 1970. Those were the December lows. Need a breakdown below 1970 to bring the bears out of the woods, so to say. That's how I see it. All right, so just to recap, overall summaries, these December lows that we came off of across the board, on the market and my primary stocks, the main question is, do they hold, or do we set up to retest them? I think we'll get a decent signal, sometime this week. I really do believe in January kind of setting the tone for the year. So hopefully that'll be the case, and we'll get some clean price action this week and for the next few weeks, and we'll have a good read on, hey, does it look like Tesla's going to go back down to 200? Does it look like Google's going back to 500? Or does it look like Tesla is going to go back up, and now this will be the year that we crack that 300 mark price line? I mean, price line's been consolidating for months. Can price line get itself back into the 1200s and go back up towards that 1300 to 1400 area, or does it want to go down towards 1000? There's a lot of intriguing setups here. 2014 for these primary stocks seemed to be a year of consolidation. I know that the market was up a lot during the year, but if we look at some monthly charts, on a price line closed 2013 at 1162. It closed 2014 at 1142. So net change, you were down $20 on the year on Priceline. You look at Google. Google closed 2013 at 560. You closed 2014 at 530. You were down $30 on the year. Not a drastic move. A lot of consolidation. Netflix closed 2013, I believe, around 360 or so. Yeah, you closed 367. you closed 2014 around 350. So those three names in particular, more or less consolidation on a year-over-year basis. Tesla, Amazon, Twitter, those all sold off pretty hard. So,